Yeah.
Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. My name is Mark Gardner. This is Phil Deloughrey. Morning, Phil.
Morning, Mark. Morning, everyone.
Morning, everyone. Stocks continue to slide overnight, led by the SOX index on rising bond yields. I don't know why they picked today out of the last 365 days to notice it, but you know, markets work that way, I suppose. ASX had a pretty good day yesterday, considering the futures was down on the Nasdaq.
Yeah.
Like, was it 1% over the course of the day? Or?
Yeah, the Nasdaq actually was down basically close to 1%. Yeah.
As of the close yesterday. But
No,
it was all to do with like earnings results and stuff, which we'll get to a little bit later on. Nikkei dropped down a little bit, but as you can see, Nasdaq, Russell, S&P 500, Dow Jones small, but yeah, overall it was those semiconductor stocks. So Micron was down 7, Intel was down about sort of 5 or 6. Meta was down another 3% today on that just growing class action case against how they targeted children to sell advertising, etc. Zucks wouldn't do that, surely. You know, pure as the driven snow. Lam Research, Caterpillar, and those names were down sort of 3 to 5% as well. Just all that data center related stuff that's been going on. Apple bounced about 1%, and you saw there was a report around digital twins, which is sort of a way of AI helping to because of map proteins, etc. For medical research and drug testing is getting, apparently hasn't had a full end-to-end FDA approval yet, but is looking quite promising. Eli Lilly's at the pointy end of that sword there, and they were up again. But I mean, also on the back of the defensive names, Apple, Berkshire Hathaway, and healthcare were up, along with the energy names as well, because this Hormuz thing's still going on. Trump did declare the Strait of Hormuz a U.S. territory last night. Just move on. But yeah, let's not get involved in the tomfoolery in all this, really. And look, overall, I mean, we're ex-bond traders. This chart goes all the way back to the mid 2021. I'm not entirely sure how the stock investors haven't noticed bond yields going up, but look, here we are. It's been kind of that what's the old analogy? The frog boiling in the pot, put them in, and you know, and eventually it'll croak. So, but yeah, look, we've had bond yields, gilts approaching 6%. France 30-year highest since 2008. 30 years at 5.33, the highest since June 2007. 10-year yields, the highest since January 2025. The 230s, the steepest since April, widest in 5 years. Japan at 30-year highest since 1996. German 10 years at the highest since 2011. And then basically you've got a bunch of the hyperscalers issuing all these bonds. We've even got our own Google kangaroo bond.
The kangaroo bond. There's been already 13 billion in interest in that. I've actually just got some of the yields that they expected the 20 years to pay over 7%. So that's quite interesting.
Well, I mean, if you look at it, Google's way more likely to go cash flow positive than the US government is.
Yeah, I think exactly.
Despite getting
wouldn't have said that 20 or 30 years ago.
No. So I'd much rather be taking Google bonds at 7% than US Treasuries at US Treasuries at 5.3, and
that just came out this morning, basically the pricing.
So look, I would say a lot of the hybrid money's going towards that, and overall we've got our fixed coupon note products around 10 to 13. This is probably a pretty similar hybrids kind of middle ground, but I mean pretty good value. But you know, it depends on what your risk profile is. I would say, we've got Google in our fixed coupon baskets, and I think they yield around about 14. So you know, it's a way of getting pretty consistent yield, but I dare say all those hybrids that have been trying to find a home that haven't found us, they're heading towards that. So ASX earnings yesterday, mate?
Okay, we'll see. It's still everyone's favourite. Everyone's a lot of people happy to see that, including my mum and a lot of retirees or whatever.
I think nearly everyone.
Yeah, I was going to say, yeah. If you were short that, well, you most hate it. Yeah,
wipe for their brow.
And then, that might stay supported with weakness in the market, healthcare. On the bid side as a defensive.
We can only hope.
Yeah, it did have a good, a good 17% is a good, run.
Well, I think it's just the bleeding stopped, right?
Yeah.
So I mean, it wasn't, a knock it out of the park result.
Yeah.
It was just we've stopped the bleeding. The patient's stable.
Yeah.
Excuse the pun,
Yeah.
but BHP up their dividend, which kept that supported as well. What else we got here? Judo,
yeah. We actually mentioned that yesterday. We thought the bad news was baked in already.
Yeah, absolutely.
And they, basically opened and traded close on its high. And I still think that was just an undervalued stock. And they, the bad news is already out. And
and it didn't open up. It opened up about 4%.
Yeah,
or something
exactly.
like that.
I think it closed at 91.5 and opened up about 97 and pulled back a bit. And then it closed up to that 115. I think 170. Yeah.
And ProMedicus.
Well, that was an interesting ride.
It was a similar story for you.
Yes.
So just to give you some context, Phil went long some ProMedicus on his own account yesterday morning, and there's a fair bit of sweating for about.
Well, I was long. I've been long for a while, and when it first opened and sort of traded 160. It was very bit of quiet in the office, but it did. It ended up, going up to $200. Actually,
tense would be a word that I would describe it as.
Yeah,
and
I think I was breathing. Yeah,
the smile and the breathing exercise.
Yeah,
the smile increased the breathing exercise.
So it was a $40 range in that. Yeah.
Yeah. So good company. RWC with some sort of takeover, private equity takeover bid. I think they reported pretty well as well. Reporting today, mate.
Okay, well, Breville, its earnings have been crunched by US tariffs, so it's interesting to see that.
Sounds like an excuse to me, but anyway.
Yeah, Evolution, I think that, I think profit was up 40%.
I think high 40s.
Was it high 40s? Okay.
All-in sustaining costs dropped 4%, interestingly, and prices up like 50%.
Yeah. And another interesting one, maybe Superloop. That might be one to watch. So, yeah.
Yeah, overall. And then Santos was pretty well watched.
Yeah.
Whitehaven and Yancoal, but Yancoal reports after the close.
Okay.
Well, I mean, it's basically Chinese owned. And
coal has been, I think since the Iranian war, whatever, I think it's up. It's been a 20%.
It's doing better than oil.
Yeah, it is. So, it's actually really they've performed well, so they're interesting to see.
Helios might be interesting for the likes of sort of maybe Sonic or whatever, but I mean, look, they're not. Not your massive top line names. The Lottery Corp might be mildly interesting as well. And look, I gave Evolution a buy on the call on Tuesday. Henry Jennings gave it a sell. But look, these guys are basically printing money, and I think you kind of get lost in the range in these stocks. Is like it pulls back, and you kind of go, well, hang on, they're still not like gold prices outpaced inflation by about 100% or more. It was never going to be like a massive issue for them. Gold, silver, copper, platinum all down somewhere in the vicinity of 2 to 4% overnight. Crudes drifted a little bit higher, around about that 92 in Brent. Uranium got hit about 3.5% overnight for whatever reason. Bit of a I mean, look, these are just risk. Going back to a bit of risk off overall.
Yeah.
Aussie drifted risk off yet again. And US dollar didn't really move a hell of a lot. Iron ore actually jumped 1%, which is lately it's been so quiet. It's been that's a pretty decent move for iron ore. Like it's just been hovering around 710 for ages.
Another thing, just quickly, interesting, the diesel crack spread.
Oh yeah, diesel's going through the roof.
So don't get excited, Mark, with the word crack, but basically got in triple figures. The first time it's ever been above $100 since its inception. The highest $89 before this whole Iranian debacle. So
we might do a slide explaining what the crack spread is tomorrow. But we've got a webinar coming up. Myself and Kai Chen, we're going to do the next phase of AI beyond the data center. We did a hyperscaling AI strategy last year. It was very popular, and the webinar was really popular. A year on, this thing's moving so fast that we're sort of looking at what that next era is going to be. What would normally take 2 to 3 years happens in about 6 months in AI. And look, I've written for those of you who are on livewiremarkets.com or read Livewire, I've written an article about this, which I released yesterday afternoon. Gives a general sort of outlook, and yeah, we'll sort of be focusing on like sort of four sectors we think are going to do quite well in over the coming over the coming 12 to 24 months. As per these sorts of things, like with software survivors, I'll probably just interview Kai. He's by far more knowledgeable than I am, but that software survivors strategy that we ran on the back of that software thing last, and we unfortunately only ever did half because of the war, has produced 2 out of the 3 have produced winners in excess of 115 odd %. I think the cyber security was about 390%. Yeah. So using the enhanced growth. So, but the webinar in itself will still give you some individual stock picks, etc. It's next Tuesday at 12:30, or if you want to watch it on demand, you can watch it on demand, but you've still got to register at mpcinvest.co/webinars, or just go to go to the website and register for the webinar, mpcmarkets.com.au. Good luck with earnings and everything today, people. Let's fingers crossed we see CSL remain higher, and yeah, well, I guess we'll speak again tomorrow.
Yeah, good to see you later.
Have a great day.
Bye.